More on the day's trade and the broader outlook. Clifford Bennett joining us from ACY Securities. Clifford, great to talk to you again. So, given what we saw in September, October's starting with more volatility. How are you looking at the market at the moment?
Good morning, Andrew. Volatility is a very kind word, isn't it? It's kind of the word we use, but we don't want to talk about a falling market. I mean, at ACY, we try to look after our clients and not just tell them what they want to hear. I think it's very important that people are aware that there are significant downside risks at the moment. I've actually put on a tie, did you notice, Andrew? I bought this tie it's a New York Stock Exchange tie, and I bought it in 1987. And I thought I'd wear it today as a timely reminder to people that markets can indeed fall. We've really been in a bearish market in US stocks for 4 weeks and a bearish market in Australian stocks for about 6 weeks. I think people are paying too much attention to the idea that vaccination numbers tell you what the economy and the market will do. I think they're completely disassociated now. We're well aware that the major economies in the world, China is definitely slowing way below pre-COVID levels now. United States, definite slowing process. We've seen negative manufacturing and production, and they were bellwether warning signs for the 1929 crash. And again, I'll say I'm not saying that, but I think people need to be aware that we live in a very sophisticated financial market, and people do have the tools at their fingertips, literally, to hedge their investment portfolios should they see fit. So I do really want to sort of sound a little bit of a warning that people should be addressing this as potentially a little bit of a historic shift in terms of equity market trajectory, rather than just a short-term aberration to blindly buy into. There's a lot going wrong in the world, and yet we're seeing oil go to all-time record highs. So we're certainly going to have entrenched stagflation at this point, and that's not a pretty picture at all when central banks around the world are starting to lean on the hiking levers. And also given that all of this supply chain disruption, all of this economic activity that was brought forward into the previous 12 to 18 months is leaving a little bit of a valley and a void for fresh economic activity going forward. If we take into account that the price gouging by major corporations and various other services taking advantage of the dislocation of COVID, as well as true supply chain disruption, is probably run its course in terms of earnings impact. And I think really we've seen high valuations. We're going to see less great earnings. We're seeing high inflation. I mean, the list goes on, and we haven't even mentioned Evergrande, but I think that's really just the bellwether catalyst for what's going on in China.
All right, Clifford, to underline your point then, let's tell the story with pictures, and first looking at the Aussie market here. Now, I know in your note I'm reading, this is the scariest, what have you said here? It is the scariest stock market setup I've ever seen. Why?
Yes, it's because everyone is still bullish and the market just keeps falling back in on itself. And also in the scale of this correction. So you can see all that activity there on the chart to your right. Previous big corrections were about the size of what is there to the left on the chart. This is a way more significant, higher quantum level. And I think it's important to think about markets that way, form of correction. And also we've seen those buying the dip rallies where people just have the expectation, and it's a reasonable expectation because that was the pattern of the market until now, that it didn't matter why the market was sold off. The idea, the best thing you could do was just buy in anyway. But this market is selling those rallies now in a way it hasn't done in the previous correction periods. Now, I could be wrong, and the market does rally from here, but I still think it's very important that people be aware that no, maybe something else is going on, and to highlight that point to people. And that price action there, where that big rally should have just consolidated and kicked on if the previous pattern of behavior was continuing, has really just collapsed back in on itself and is now heavy to the downside. And a big warning sign is also in the US market, Andrew.
All right, well, in fact, let's take a look at that, particularly as far as tech. Of course, we saw another sell-off last night, overnight, as far as the NASDAQ is concerned. Let's bring up the chart, see what that's telling you.
That's a very heavy fall last night. a gain when the market had fallen back to previous lows, and a lot of people had taken a buy the dip approach. And we're seeing some of the significant stocks like Apple look very heavy indeed. And again, that is a warning that something bigger is going on here. And that NASDAQ chart, it doesn't get, to be honest, Andrew, it doesn't get any more bearish than that either. There might be a rally, sure, but I think the best the market could do at this point from purely a market psychology point of view, let alone all the bearish fundamentals that are out there in the background, is sort of have a small bounce, or it could have even one of those spike bounces, but you're going to see sideways consolidation before falling further, and that's the most bullish I can get. The risk is that the market continues to fall away here. I mean, we've got to remember it was only not 2020 that we had a 40% correction, or 30% in the US, 40% in Australia. You know, it was only 1987 when I bought this tie before the crash that there was a 50% decline in the Australian equity market over a period of a few days. Now, I'm not saying that's going to happen, but again, just putting up the little warning flag there.
All right. Did you really have to wear that tie today? Just for those that can't remember 1987. Some may be a little young to remember that.
Yeah, maybe some people weren't even born. So yeah.
Hey, okay. So that all said, then, Clifford, where is the place to be right now? And I'm leading you into the gold story.
Sure. Yeah. I think in times of upheaval, it's always been the case that people really do, in modern history anyway, they run to the US dollar. Throughout history, people have run to gold. The recent run to the US dollar has been very much, and I've characterized it as such for quite some time, a safe haven flurry from the rest of the world into the US. And I've always said that that shift would move towards gold. And I called that maybe a little bit early, but we've basically been volatile sideways. I think what's going to happen here, and I was really noted, I think it was Thursday or Friday, that gold rallied even when the euro dollar fell. So even though the US dollar was getting stronger, gold suddenly started to bounce and rally itself again. And I think that's a very positive sign for the gold outlook as a hedge. And if should the equity market continue to unravel, increasingly people are going to look towards gold. And I think that's becoming a little bit of a theme that will grow.
Clifford, thanks so much for joining us. Maybe pick a different tie next time.
No tie next week.
Okay. Good to talk to you. Thanks for joining us from ACY.
Take care.